a look at our commodities. So we're going to look at gold and silver, obviously are doing some very important things right now. So just looking at the XAU chart, which is the gold spot chart, we can pay attention to what is taking place and what we're potentially expecting to happen or what could be happening here. This basically like a shift in the markets. So it's a little clearer on silver, but essentially we have a potential left shoulder right here, a neckline, a head, neckline touch again, and then right shoulder. So we basically have an inverted head and shoulders potential pattern. And once we broke through the resistance, which, essentially was the 200 exponential on simple, we would expect to potentially get the measured move of those back to the upside. So now obviously we have our targets in place right here. So there's quite a bit once again going on this chart. Let me turn off the moving averages so it's a little more clear. We can see we have a couple of different resistances on the top here in like pink and purple, drawn based on the time frames, depending if you're looking at daily, weekly, or monthly, going by like candle closes or most touch points. But we basically have our purple resistance, which is a little steeper to the downside, which we have broken through right here and then gotten our push up. And then we see our pink resistance here, which goes from all these different points right here, which is where we're at right now. So we have made it all the way back to that pink resistance. We'll see the same thing here on the bottom. We have the blue support and the green support, depending on what time frame you're on and going by candle closes, etc. We can see obviously how these resistance or support lines have corresponded on these push downs as well. So essentially, as far as I'm concerned right now, we are in a symmetrical triangle or a flag pattern, which typically after a move to the upside, this is a consolidation pattern followed by continuation. So this is a bullish pattern the majority of the time. So now what we're paying attention to is also the Fibonacci level from the top right here, the all-time high at just over 2,000 to our sell-off low right here at 1671. So we have a Fibonacci here drawn in orange from the top to the bottom. The initial push up here from the bottom was the 618 Fibonacci level, and we'll see we topped out specifically exactly at that level. So we know this Fibonacci is valid. We also know that if we look back in time, obviously we didn't know where the bottom was going to be until this was in place. But if we look back at that previous low, that lined up perfectly with the 236 in hindsight. And then the previous low before that lined up almost perfectly with the 0.5 as well. And then again, we see, very clear correlation with those levels on the way down. And then on the way back up, we hit the 618. We come back down, find support on the 236, come back down and basically retest those lows. And this starts to look a little more like a descending triangle instead. But we don't sell off violently down to there. We have more of just like a wick. It gets bought up pretty aggressively. And then we start to see some resistance here at the 382, but we hold the 236. And now here we are back at the 0.5. So what we're paying attention to now is, are we going to break above this level and retest the 618, potentially even higher? Or are we going to find resistance here, come all the way back down to the 236 and just continue to fill out this triangle pattern? Either one is obviously possible. We still have momentum in our favor on the daily. We are still inside the bullish control zone on the daily, and we have the 8 and 21 cross to the upside. But we are currently at resistance based on that 0.5 Fibonacci level, based on the top of our pink resistance here as well. So this, in my opinion, I keep hearing a bunch of people saying, this is it. This is the time to buy gold. This is the time. If you're not holding, it's your last chance. Last chance to get gold. It's getting hard to find. It's getting scarce. Blah, 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 blah. That's the exact same thing that we're saying right here. Last chance before our new all-time highs. Last chance before our new all-time highs. Last chance before our new all-time highs. Same thing up here. Last chance before gold 10,000. So fight the FOMO. I guess that's all I have to say. If you're not currently positioned, I would rather buy into momentum after a breakout, consolidation, and continuation than, buy into resistance and then see a pullback back down to the bottom of the range where I would expect us to find support. Overall, this is a bullish pattern. Overall, the environment, assuming the inflation trade is still on, assuming people are afraid of inflation and then it will persist into the future and continue to rise, and we keep seeing these big CPI prints and everything's going to cost more money, I would expect gold, obviously, to rise over time, as people do de-risk a little bit from some of the speculative assets. But I'm just not sure that that's the case. In a risk-on scenario, I don't think gold does that well. And also, if oil starts to, subside, I don't necessarily think gold is going to do that well. I think more realistically that we might see miners outperform gold, and they might be better because they're going to be more profitable with lower oil prices if gold price was to stay the same, etc. So, but again, just paying attention to that, watching what's taking place. And now I want to switch out to the weekly, and I want to pay attention to something very key on the weekly, that once again has me very skeptical of this move as well. So let's look back at, obviously this was the high from 2020 on gold. Let's look back for some similarities from the high back in 2011 and what happened to the people that got overly bullish at the wrong time here. So we put in obviously a new all-time high in US dollars, came down, found support, a lower low, lower high, and then once again lower high, and then put in, you know, essentially like same low. So we now have what looked like a descending triangle taking place, obviously a predominantly bearish pattern. Looked like we're going to come down here, potentially break to the downside. We had crossed 8 and 21 to the downside, and then all of a sudden we burst back to the upside. It gets extremely bullish as it looks like a technical breakout, but then what happens? We essentially come back up and retest that previous high, and we get what amounts to like a double or triple top after the all-time high. So we have an all-time high, and then we have what amounts to basically a triple top, and then we end up crossing the 821 downside, and then we actually break down below the 200 exponential and simple. We retest it. It fails to act as support. We fail to break back above it. I should say it fails to act as support here, and then we fail to break back above it, fail to break back above it, and then we go into a bear market. So remember, this topped in 2011 basically, and then we are in a bear market and finally put in a low in 2015. So for 4 years, it just bled out and lost roughly, you know, from the high to the low, it lost 45% of its value. So if you bought into the fake out, if you bought into the failed breakout right there from the high to the low, you lost over 41% of your value, you know, with FOMO. So definitely very cautious at this level. Obviously, once you broke down below, you know, this key support right here, you should have known to get the hell out. Or once we broke down below 200 exponential, or once we flipped the 200 exponential and simple over to the downside and entered into a confirmed bear market, whatever. But regardless, if you did not, if you entered a position right here and were trapped in that position, that was in October of 2012. We did not reach that level again until July of 2020. So you spent 8 years trapped upside down in a position because of your FOMO, when all you really had to do was just let the price go up another, you know, potentially, if assuming you were going to buy the breakout, another 7%. So you were 7% away from a new all-time high and then buying into momentum versus FOMOing in and losing 12 years of your life or 40-something% of your value. So, and that's dead money. If something's sitting around for 12 years, you know, and you're underwater in it and you're just hodling it, you're just holding, you're just praying and hoping and wishing, that's dead money. And you're no longer an investor. You're a hodler, and, you know, you failed. So basically, once we started to see the retest of the 200 exponential and simple, we finally broke back above it. This is when I got extremely bullish on gold. Anybody that, you know, knew me or was following me at the time knew that I made the call on the breakout of gold above the 200 exponential and simple. Once we broke out, came back down and retest at roughly $1,300 is where I got extremely bullish. I actually was at $1,350 on the break. Well, I was starting to get very bullish right here, but I was still skeptical because of what had happened here where we flipped the slope line back over and then came down lower. But once we broke through this resistance level right here, which was a very key resistance, I got extremely bullish on gold at just above $1,350. And then we obviously had a very nice run up from then, you know, roughly like, what, over 50% in that amount of time. So instead of just sitting around dead money, you know, we were able to capitalize on that move and then get out, you know, with a 40 to 50% profit and, you know, not just sit around. We were able to use that money somewhere else in the meantime. So now what I'm looking at right here and what I'm seeing is a very similar signature. Now the same thing does not have to happen again. We do not have to top out right here. But again, look at this. We have a all-time high and then we have a 1-2 triple top breakdown. And here we have an all-time high and then, you know, potentially a, you know, 1-2 potential triple top breakdown. So the real level to invalidate for me and to actually get bullish on, you know, what's taking place right now for me is I really want to see us break above the 618 and then consolidate and potentially get the measure move breakout of the actual like flag itself. And then obviously if we just kind of zoom out here once again, we can turn off the auto and we can see that I have just taken the pole, you know, which is basically just the move up to the consolidation pattern and then just extrapolated that as a breakout of the actual like flag itself. So let's just assume we broke out right here. We would essentially expect a target of like 2750. You know, would gold probably go much higher than that? Sure, probably would. What does the world look like that? You know, who knows? Hyperinflation, you know, the world's crumbling. I don't know. I don't know what happens. Maybe a million different things. But the fact of the matter is, on the weekly here, we have flipped over the slope line blue. We have momentum in our favor. We're above the zero line. We're above the slope line. And we're seeing green histograms. So while that does look good, again, we have to be very, very careful because this is, let me just switch back over here one more time. This is like essentially what we saw right here. We broke out above, let me just zoom in on this. We broke out above the zero line, above the slope line, multiple green histograms in a row. We flipped the slope over blue. And then what happened after that? That was the absolute top. That was literally the absolute top when it flipped over blue. We're inside the bullish control zone. We then exit the bullish control zone. We get the hard sell signal. And then we go into, you know, 12-year downtrend consolidation, 40+%. You know, gold is dead, blah, 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 blah. So again, very, very similar to what we're seeing potentially take place right now. So while I am cautiously ambitious for gold and gold prices and the future of gold, I am cautiously ambitious because I do not want to. I mean, I refuse to be trapped in a situation like that personally, but you know, don't want other people to be trapped in that situation as well. You know, and you know, part of me is like pulling for old Peter Schiff there. Like, you know, it sucks to be wrong 98% of the time. But yeah, that is our gold chart right there. And then